Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, before we get started, let's take a quick look at where the markets are at. Snehi, yesterday with the stellar rally that we saw coming in after 2 p.m., the bit of a consolidation happening on Nifty right now. It was pretty much on the cards, but Nifty pretty flat right now. But Nifty Bank is where the action is. That is outperforming right now. It's trading with gains of almost 100 points.
Absolutely. So like you mentioned it, Nifty 50 being rather range bound today, but not much to worry about, because despite the rally we've seen yesterday, as of now also we're just 0.1% down. Roughly 24 points lower is where we are on the Nifty 50 right now. And let's see if we're able to break through the green, because it's a very flat move coming in. Sensex also in tandem with the Nifty, very flat. But like Ankita mentioned, Nifty Bank is where all the action is. 102 point uptick coming in on that front. But if you take a look at what the broader markets are doing, they are outperforming the benchmarks. Nifty mid cap and small cap both are up 0.7% each. 0.8% mid cap is gaining. Remember, today mid cap has also reached its all-time high level, the mid cap 100 level. So good moves coming in on both the fronts. Quickly just taking a look at some sectoral moves other than FMCG, energy, and Nifty finance also rather flat. Rather than FMCG and energy, largely all other sectors are in the green. Realty, media, PSU bank, metal and IT, they are leading all the gains. This is what the market breadth is looking like right now.
All right, but let's move on then. There's a news coming in on the fact that Ford has submitted a letter of intent to Tamil Nadu government on restarting manufacturing operations at the Chennai plant for exports. Let's go across to my colleague Sumit, who's joining us with more details on that story.
Well, Ford, it wrapped up its operations a few years ago as far as sales are concerned, but now today it has come up with a statement saying that it is in fact submitted a letter of intent to Tamil Nadu government. This is to restart manufacturing operations for exports at the Chennai plant. We must tell the viewers that, well, they exited India from sales. Well, their vehicles were very popular like Endeavour and EcoSport. However, they still have good facilities in India. At Sanand, they are having an engine manufacturing plant. In Tamil Nadu only, they employ 12,000 people and intend to employ up to 3,000 more over the next few years. But they are looking at India once again with a lot of seriousness, because these manufacturing operations will be for exports. In fact, few days ago, Tamil Nadu Chief Minister, while on a visit to US, met Ford representatives, and there it was quite clear that Ford is making a comeback again in India, and this time today it's confirmed with the company coming out with a statement saying they are going to start these operations once again. While when they exited India, before that they had plans with Mahindra to start operations, but that couldn't fructify, and that's why they had to go hurriedly as far as sales are concerned. However, there are many hundreds of thousands of customers of Ford who are still in India, and they trust the company as well.
All right, Sumit, thank you so much for joining us with the details. But let's get started with all the stocks that are in focus today. Then for that, we're joined by Arpit Beriwal on the technicals as the Manager Derivatives Analyst, Equity Research, Motilal Oswal Services. And from the research team, Jenna is joining us. Hi, good afternoon, both of you. Thank you so much for joining us today. And with that, let's get started with the countdown of all the stocks that are in focus today. Bharti Airtel, this name is in focus on the back of a note by Jefferies that is maintaining a buy on the counter. They've hiked the target price to 1,970 rupees from 1,760 rupees earlier on. And that's an upside of almost 20%. And the multiple tariff hikes is what they're penciling in. They've also raised their FY 26-27 India revenue and EBITDA estimates by 5 to 9%. Strong 19% EBITDA CAGR over FY 24 to 27 is what they're penciling in, along with lower capex to support 23% CAGR in the FCF and drive the stock returns. And they believe that Bharti Airtel should sustain premium valuations, and on the back of that, they're maintaining their buy on the counter. Currently Bharti Airtel has given up those morning gains. This has now entered the red territory, and it's trading with cuts of 0.9% right now.
Okay, well, so that's Bharti Airtel on the back of news flow. But Arpit, you've picked out Bharti Airtel on the charts as well. Tell us what levels you're spotting on the stock and an upside, if any, because last 6 months itself, the stock has given a decent 40% return. So now, which direction do you expect the stock to head in, and what are the levels you're watching?
Yeah, so very good afternoon, everyone. If you talk about overall Bharti, So we have been quite bullish on the telecom space itself, and Bharti has been a top pick within the space. If we see the structure of monthly setup, the structure of high rise, high lows is completely intact from last 8 to 10 months, and slowly steady the base of the stock is shifting higher from 1200 to 1300, from 1300 to 1500, and now it has moved to another new life high. Yesterday has seen a sharp rally towards new lifetime high territory. So looking at the overall charts perspective also, though we have seen a sharp rally in recent past, but the current trend and the intact is strong, and going forward also slowly steadily we can see momentum towards 1800 1850 plus zones in coming 2 to 3 months. So if someone has a positional view within the telecom pack, Bharti would be a top pick. Technically on all time frames, monthly, weekly, daily, the stock is strong uptrend. Some profit booking seen from higher levels. However, if you see the weekly setup, it is still very strong, forming high rise, high low. So Bharti one can go long at current levels or minor dip near 1610, 1620 levels, with keeping stop loss of 50-50 for an upside move towards 1750, then 1800 plus zones.
Those are the levels to watch out for Bharti Airtel, but let's keep it going with that, because next stock to talk about is Bharti Hexacom today, and this is on the back of a brokerage note coming in from Jefferies. This stock was as high as 8% on today's trading session. As of now, also trading with a gain of 6%, in fact more than 6% coming in. Now Jefferies on Bharti Hexacom, let's see what that note is. They've upgraded the stock to a buy rating from a hold rating, also hiked the target price to 1600 from the earlier 1260 that they had given. Still quite an upside from where the stock is trading right now at 1372. They believe that the stock is the best play on the tariff hikes, and Jio's rising focus on growth and Vodafone's market share losses may need multiple tariff hikes over the next few years. They've also raised the FY 26-27 revenue EBITDA estimates by 5 to 12%, and they expect 10% tariff hike in the mid FY 26 in addition to the 10% hike that they were modeling in for quarter 2 of FY 25. So well, lots to watch out for when it comes to Bharti Hexacom. Very bullish note coming in from Jefferies. Gone ahead, upgraded the stock as well, and hiked the target price. And on the back of that, that stock is up 6%.
All right, moving on to Tata Power, the name that you've picked out, Jinay, for us. Tell us, there's some MOU signing that has happened for Tata Power. Tell us, what does that MOU say?
Well, as Tata Power will be in focus, as Tata Power Renewable Energy and Tata Motors have signed an MOU to set up 200 fast charging stations for electric commercial vehicles across all the major metro cities in India. Now, both of these companies will provide an exclusive charging tariff to Tata Motors electric CV owners, resulting in a lower operating cost and increased profitability for their customers. Electric commercial vehicle users across the country will soon benefit from this, the company says, as they will get access to more than 1,000 strategically located fast chargers. On the back of this, Tata Power will be in focus, currently trading up about 1%.
Okay, so that's the word coming in on Tata Power. Let's talk about two more stocks that are in focus today. One of them is outperforming the market. It's Kalyan Jewellers and Titan. Both of these stocks are on Citi's radar today because Citi has come up with a brokerage note. If you take a look at Kalyan, that's up almost 5.5%. Titan is rather tempered in today's trading session, but in the green nonetheless. Let's see what the take of Citi is on these jewelry stocks. For Titan, they've maintained a neutral rating, hiked the target price to 4,110 from the current 3,510, and for Kalyan, they've maintained a buy rating, also hiked the target price to 770 rupees from the current target of 650 that they have given. They are factoring in better demand trend on the back of the custom duty cut. Remember, that was announced in the union budget this time around. And the second news flow here is also the way gold has been behaving, because the precious yellow metal has rallied to live highs amid a weakening dollar and the optimism over impending US rate cuts. So if you take a look at gold financiers today, jewelry counters also, other than Kalyan and Titan, you have Senco, Muthoot, Manappuram Finance, all your gold financiers as well, and gold jewelry makers as well are all being seen extending gains in today's trading session. So that's why Kalyan and Titan are in focus today.
All right, speaking of Kalyan and Titan, Titan is also on Arpit's radar. Arpit, you picked out Titan for us. This particular counter, though, hasn't done anything in the last 6 months. Is on the radar of a lot of techies. Tell us what is the up move that you see? It has just started moving in the last few weeks, or let's just say last 1 month. So what's the upside that you're penciling in for this stock?
So as rightly said, jewelry stocks has been on a fire from past couple of weeks, and we have seen tremendous rally across jewelry stocks. So within the F&O space, if we see, Titan is the favored bet. In last 6 months, the stock is a range bound between 3,300 to 3,700 zones. However, last month we have seen a decent rally from 3500 to 3700 zone. So on weekly structure, the structure of higher lows is intact. On daily scale also, the structure of higher highs, higher lows is intact. So looking at the overall monthly and weekly setup, we can expect that Titan can hit to new lifetime highs in coming months. So from a positional perspective, good 7 to 8% rally can be seen. Though the rally would be slow and steadily, but overall looking at the setup wise, we can expect move towards 3900, 3950 zones. So Titan would be a preferred pick within the jewelry space, with keeping stop loss of 3680 for an upside move towards 3850, then 3900 zones.
Okay, so 3850, 3900 on the upside is the levels that Arpit is spotting for Titan. But Arpit, Janai and our viewers, stay tuned to the channel. We'll be right back after this short break. But amid the recent volatility, it is the FMCG pack that is spotting some strength. But it is the momentum here to stay. Will that translate into some kind of outperformance? Let's go across and hear out Nilesh Shah's view on this sector while we come back from the short break.
Good. There is election money spending, there is budget spending, and there is good monsoon. And stocks haven't done well for some time. Valuations are elevated compared to market, but around historical averages compared to their long-term trend. And hence FMCG is one place which will outperform the market. The market is moving so fast that in just about a month or so, FMCG companies have rallied. We still believe within FMCG, on a bottom-up stock picking, there could be opportunity.
Welcome back. You're tuned into Fatafat, where we are taking you through all the stocks that are in focus today. And one stock that has been in focus, for the last 2 days has been Granules. The shares of Granules India extended their losing streak to the third straight session after falling as much as 4% in trade yesterday. As a result, the stock has actually plunged 23% over the course of just 3 sessions, with a fall triggered by the US FDA, issuing a Form 483 with 6 observations for companies' Gallipur manufacturing site. Now, despite concerns surrounding its Gallipur site, brokerage firm Motilal Oswal has assigned it a buy rating on Granules India with a price target of 680 rupees per share. Now, the company is expected to implement remediation measures to address the issue, is what Motilal Oswal is saying. They feel that currently there are no major products from this side awaiting approval, and potential impacts have been factored into the current estimates. However, clarity is still awaited on how the remediation efforts might affect the ongoing business. On the back of that, Motilal Oswal is maintaining a buy. So Granules, even though tanked early in the morning, has recovered from those losses, is currently trading flat with the cuts of 0.3%.
Okay, so that's on Granules India. Remember, big loser today, slight recovery being seen, big loser yesterday and slight recovery being seen today. But keeping it with the pharma space, pharma is poised for a big up move, and this is according to Atul Suri of Marathon Trends PMS. Let's go across and listen into what he had to say about the space.
We've been able to clip off a good 15%, and our weightage has increased dramatically to pharma. We feel that pharma is one sector that has been ignored for many, many years, and there's a lot of improvement in their performance, in the overall. They've been able to clean up the house for them, and we feel that pharma is actually getting poised for a very, very big up move. So we find a major allocation has gone into pharma and FMCG. I also get a sense by looking at the market that the whole rural theme is playing out. You can also see it between four-wheelers to two-wheelers, that the government post-elections has had a bit of a reality check, and they feel the need that there is rural distress. They need to remedy that. So the feeling is that a lot more money is going to flow in there. Plus, we've had a fantastic monsoon. So you're having record sowing. So the output is that you may have an excellent, excellent harvest. So I do think that the market is moving towards the rural driven themes. That is why, when we talk of FMCG and stuff like that, you will find that they're doing very well. Some of the fertilizer stocks are doing very well. So I feel the market's moving on a bigger play from a risk on to a bit of a risk off mode.
Alright, on that note, let's talk about a buzzer in today's trade, and that is RailTel. Now, this is on the back of an order win for the company, and this announcement just came an hour or so ago, and the stock is holding up almost 2% as we speak. Now, RailTel has received a work order worth 19.7 crores almost from the Gati Shakti LKO division of the Northern Railway for the provision of double distance in connection with FDC feeder routes over the Lucknow division. The project needs to be executed over a period of 2 years, that is by September 11, 2026. So on the back of this order win, a big amount coming in fact almost 19.7 crore rupee order win coming in for RailTel from the Northern Railway, and on the back of that the stock is up almost 2%.
Alright, moving on, Arpit, you picked out Indigo for us, and this counter has given some good returns in the last 6 months, 60% returns. In fact, last few weeks is where it has really moved up, almost 15% actually. Tell us, what are you penciling in on the charts for this counter?
Yeah, so talking about Indigo, if you see all the industries related to crude has seen a sharp up move, whether it's the aviation, whether it's the tires or the cement pack. If we talk about Indigo, technically the stock is in strong uptrend. On monthly scale, the structure of higher highs, high lows is intact. On weekly scale, it gave a range breakout a couple of weeks back around 4400, and post that we have seen a sharp rally. Post that from last couple of days on daily basis it was consolidating, and we have seen a fresh breakout yesterday from its pole and flag breakout pattern, which indicates a bullish continuation pattern, and slowly steadily we can expect another 8-2% rally positionally in Indigo. So Indigo would be a preferred pick. One can go long at current levels or minor dips near 4920, 4930 zones, with keeping stop loss of 4800 for an upside move towards 5050 and then 5200 zones.
The word coming in on Interglobe Aviation. In fact, that is one of Arpit's preferred picks as well. But on that note, we'll slip into a very short break. When we return, we'll talk about more buzzers in today's trade, so you stay tuned.
If you like this video, then like, share and subscribe to ET Now.